Okay, the world's biggest e-scooter company, Lime, raising $523 million in debt financing. The company made the announcement on Friday and also confirmed its plans to go public sometime in 2022. The funding comes after Lime and the e-scooter industry in general was hit hard by this pandemic. Lime saw its ridership drop 95%, but this new round of funding and Lime's plans to go public signal the company and investors are still very hopeful about its future. Joining us now to talk more about Lime and its future is the company's CEO, Wayne Ting. Wayne, thanks so much for joining us. Lime's new debt financing and the plans to go public announced simultaneously. So why was now the right time to announce these plans and go public?
Well, I think the fact that we were able to raise $523 million in a significantly oversubscribed round really just shows that investors are regaining and having a renewed confidence in the shared e-bike, e-scooter space. And more importantly, it's a recognition that Lime is the undisputed leader in this space. And so as we're looking towards next year, this huge round, which is largely a convertible round, which means that it converts into equity at the point of IPO, we think it's a perfect instrument to showcase that we're ready and we're going to be looking towards taking Lime public sometime next year.
Can you share how you plan to use these new funds? We know a portion of these will be used to pay off debt.
Yeah, well, I think that we're absolutely going to use the money we just raised towards renewing our e-bike and e-scooters to our latest generation 4, which frankly are just the industry best. And we've seen incredible results from them, not just from an operational perspective, profitability perspective, but they're also by far the most green scooters and e-bikes we've seen. The other thing we're going to be using is we're going to be investing $20 million of this funding towards our mission to get to net zero on carbon by 2030. We set some of the most stringent and most aggressive goals in the entire industry. And we've asked the Science-Based Targets, which is the most stringent corporate validator, to look at our results and validate that we're achieving those goals over the long run. And we're going to be investing millions of dollars to improving our supply chain hardware to ensure that we are on track to meet what is our most important mission, which is to decarbonize transportation.
Wayne, Lime saw its ridership drop amid the pandemic. We mentioned the numbers earlier. The company was forced to pull charging stations from 99% of its markets. I can tell you, being here in Southern California, especially in areas like Los Angeles, the e-scooter industry still very popular. We know that the pandemic was definitely a hard time to recover from, but people are back out and about and using these scooters. What are your plans in terms of recovery from the pandemic lows?
What's most incredible was that during the pandemic, we actually saw intercity travel surge across the world. People are choosing micromobility, especially during the pandemic, because we are open air, single passenger. We are oftentimes the safest way to move around. Not only that, we're absolutely the greenest way to move around. And so 2021 revenues is on path to be roughly the same as 2019. So we are actually already recovered back to pre-pandemic levels. And when I look towards 2022, tourism's coming back, commute is coming back. We're hearing companies reopen their offices. This week, Europeans are going to be able to visit the United States for the first time in a year and a half. All those things are going to be incremental growth on top of what we've seen before. And so I feel really optimistic on top line. The people who have learned about micromobility are going to change their behavior. And if anything, climate change and the challenge of climate change is going to get them to do more green activities like ride bikes and scooters. And on top of that, we're going to get an incremental tailwind from things like commute and tourism being a big boost for 2022.
Wayne, you're also the third CEO at Lime. I believe you started in May of 2020, really a challenging time during this pandemic. How have you seen the valuation of the company change during your tenure?
I think the valuation ultimately is going to be up to the market. I think there's last week a couple of our main competitor went public at a $2 billion valuation. We are the biggest player by far. In fact, we are 2 times bigger on a monthly active user basis than our nearest competitor. Not only that, we're the only global player at this point. We're the #1 player in the United States, and we're the #1 player in Europe, and we're the only player, frankly, competing on a global basis. And you take a look look at profitability, last quarter, we announced our second quarter of profitability on an EBITDA basis. No other company has ever done that. And so when I look at our valuation relative to a public competitor, I feel very, very good. I think it sets a mark. And, given that we're 2 times the size, better margins, globally diversified, I certainly think it signals a major, major rebound for Lime's valuation as we look towards going public next year.
And as far as consumer sentiment goes, you mentioned just a bit earlier, one of the most attractive things about Lime is the fact that it is green. There is an element there of eco-friendliness. You have a goal to reach net zero carbon emissions by 2030. Can you just give us an update of the work that Lime is doing in that regard?
Absolutely. I think there is no greater challenge for this planet, for our Earth, than the challenge we face with the climate crisis. And one of the biggest sources of carbon pollution in the United States, the number one source of carbon pollution is transportation. The bulk of it is personal cars and trucks. And I know there's a lot of conversations about moving to electric cars, but the reason why cars consume so much energy is because it's heavy. The average car in America is 4,000 pounds. And when you use 4,000-pound tanks to move 200-pound humans, all the energy consumption goes to moving the car. And so if we're going to get serious about climate change, we have to change our own behavior. And in the United States, that absolutely means driving less and using more public transportation, and alongside green transportation alternatives like e-bikes and e-scooters. There is no more important time and no greater challenge that for us to meet than this crisis on climate change. So if the average trip on Lime produces less than 7% of the equivalent carbon emissions of a car trip. And not only that, we don't think 7% is good enough. So we have set the most stringent goals to hit net zero by 2030. What does that mean? That means completely redesigning our e-bikes and e-scooters to ensure that they are the cleanest, greenest that we can have. That also means going to our suppliers and asking them to set their own carbon goals, because oftentimes companies don't count their upstream and downstream suppliers. We've committed to get 80% of our suppliers to set their own carbon goals. And if they do not, we are committed to not working with them in the future. And on top of that, we're going to reorg our entire operations from using all renewable energy, electric vans for everything, and moving more things to electric cargo bikes in terms of how we're recharging. All those things are going to make even bigger incremental improvements on our carbon footprint. We're at 7% on an equivalent trip versus cars. We'd love to get that down to 3 or 4% over the next 5 to 10 years.
Wayne, thanks so much for laying that out for us. I had so many other questions about the company going public, so we'll have to have you back on Cheddar News, but appreciate it. That's Wayne Ting, CEO of Lime. Thanks again.